Okay, here's the boring bit. Anything you hear or see in this video is not investment advice. It could be absolute rubbish. Please do your own research. Hi there, welcome to my latest video. It's been a while, but in this video I'm going to talk about 9 reasons I invested in Escape Hunt. Now, we'll get into that in a bit, but I'm going to say, if you want the next video to your inbox, straight to your inbox as soon as I release it, then hit that subscribe button and the notification bell. Okay, let's get into it. Okay, here's 9 reasons I bought Escape Hunt. That's ESC ticker. Of course, what do they do? They're an award-winning leader in providing escape the room experiences, and these have exploded over the last few years. And they're on a network, 9 in the UK right now, and also on a franchise network around the world. The company's strategy is creating high-quality premium games with experiences which incorporates branded IP content. We'll get into that in a bit. So this is pre my email newsletter. If you want my newsletter, it gives it pretty much on a Friday afternoon. I send it out when I'm talking about new stock, not every week, only if and when. This was pre that. This is about a Thursday. This was 5.4 million market cap. The company had 1.2 million in net cash on the 4th of May, raised 4 million in July, 7.5 pence. So the result of that, this is on Thursday, by the way, they had 74% of their valuations in cash. Okay, and the current share price was 10% below the current placing price. So if you'd been on my email newsletter, you'd have got this information. And by all means, if you want to get on that newsletter list, look below in the more information bit on YouTube here, or just contact me on Twitter, and I'll send you the link to join that, and you'll get my next email newsletter. This is what happened afterwards. So after my email newsletter went out, essentially, it's on the Friday afternoon. It was flat Friday, but it went up by 14%. Now it's 6.23 million. So 64% of the valuation is still cash. Huge amount still. So the volume was very good on the Friday afternoon at 1.1 million, which almost 3 times average, or twice average daily volume. So join that list and you probably get a heads up there. So this is my rationale for investing, right? There's been an explosion in escape rooms, and this is experiential spend has gone up. People want to spend on experiences, not things easier. I get that now. But it's like the bowling market, I'd say, some 20 years ago. There's lots of operators jumped up, a trend happened, a fad happened, exploded. And after a while, there wasn't enough demand. The fad went down, and then you sort of a level playing field, or sort of a certain level of demand for bowling. And there wasn't, if you weren't located properly, if you didn't have the best product, you'd just fall by the wayside. And that happened. And only the best will survive. So the best, highest quality, finance companies will survive. And I believe Escape Hunt are, in that space there. They are the market leader. They can afford sort of prime locations. They've got the best content. They've got a very efficient management team. So low costs there, and then expand. So they've got enough cash to last 5 months, even without no revenue. But they've been open since the 10th of July anyway, and they've been doing quite well, because unlike other big sort of leisure sort of activity, bowling or cinema, it's not a big room with lots of people, sort of passing germs around. It's just sessions. So you have 6 people. I think the optimal sort of amount is 8 people per session, but 6 people now with the new COVID rules, ridiculous rules. But they can go in, 6 people at a time, do their session, which is, an hour and a half, whatever, come out, half an hour cleaning, another 6 go in. So it's ideal. It's very COVID friendly, or anti-COVID friendly, I should say. So they can be profitable with 15 sites. They've got 9 already. They plan to add 5 new sites by Q2 next year, a further 6 by Q2 2020. So that's 20 sites profitable there, and have signed an agreement to roll out a franchise in the USA and Canada with a well-known sort of franchisee builder. So let's go through my filters. Okay, current market cap. Like I said, when I look at companies, you've got to look at the size, because approximately 75% of the biggest rises any year start off their valuation below 30 million. But those could pop and drop. You've got to look for sustainable rises, and that's about revenue and cash generation. Okay, this was the chart. The second point on that is that the chart is it below 30, rising towards 50, and getting a good price is essential to get a good return. Like I said, you can buy a good company at a bad price and lose money, a bad company at a good price and lose money. What you want to do is buy a good company at a good price. Look at this, pretty much an all-time low, not far off lows. This was pre my email newsletter. This is after my newsletter, so it did pop up here. So that's ideal, that the strength is popping up. Bit of volume here on that day, and so that's popping up. So it's been bounced on the bottom, like I said, run about this placing price. So very good. This used to be above £1 a share, I think. Let me just check where it was. If I look on the chart in real time here. So when it first started, there was high hopes, of course, because there was a fashion in these places. And I think it was £1. It's not filling in here. My internet's obviously slow. But it was a lot higher than this. And I think at the moment, there's no valuation at all in this. It's just cash, pretty much. And like I said, they are now getting to scale, and scale means a lot, and I'll point that out later. So is the sector hot? It is. This is. I put this quote in here because I think it's very appropriate. So before I was in there, I used to study happiness a bit because I had sort of mental issues and all that stuff, and I often get depressed. And I discovered basically exercise, eat well, and don't accumulate things. And one of the things I found when sort of reading about happiness and all that is that you should fill your life with experiences, not things. Have stories to tell, not stuff to show. Memories is what life is made of. That's what it's all about. And the budgets for experiential marketing rose 19 consecutive quarters to Q2 in 2018. And in the Q4, it was the only, in Q4 2018, it was the only events that saw any rise in investment at all. So experiential is a big market and growing. And look at this. So you look at the average. This is total personal consumption expenditure. Okay, total on goods 1.6, total services. Experience related 6.3% from 2014 to 2016. This is annual personal consumption expenditure growth. So it's the biggest marketing area of spend. People want to experience things, like holidays, stuff like that. But according to research by McKinsey, consumers are increasingly opting for experiences with their friends and families. And of course, you escape hunt kind of room things. You take lots of selfies, photos, and share it. So the marketing side is also done for them, pretty much. Personal consumption expenses on experience-related activities grew more than 1.5 times faster than overall personal spending, 4 times faster than expenditure on goods. So, like I said, it's a very fast-growing market, experiences, and that's why there's room in the market here for escape rooms, because it's another option, Spending on experiences, so millennials, this is roughly age group, 25 to 39s, 164, look at that. This is dollars reported an average month. Of course, baby boomers 56, 70. But as I said, the younger generations are going for experiences more than anything. I suppose that's in large fueled by social media. People like to share their experiences, show off a bit. So, but experiences are definitely better than collecting stuff, aren't they? Memories and happiness and all that stuff. And as far as countries are concerned, the UK is not over-invested in this area. Look, Netherlands, they love it. Yeah, try to escape the place. Spain. For France is higher than this. We're down here, so there's plenty of room here to expand. Canada just expanded quickly in the last, didn't have anything in 18, but 20 has gone up. So we've plenty of room to grow. And the USA, where they have franchise. In fact, they're franchise all over the world, but the USA again is not over the top here. So, and I have to say this. What are the options for going out? I was talking on the weekend podcast saying, a couple of mates coming down. My wife is going to go out with us. We often go for a game of golf. Steve doesn't like golf. Me and Pete find it okay. You can go bowling. My wife does pretty like bowling, pretty much. But we'll talk about escape routes. Yeah, I quite like that because we've done one before. And so it appeals broadly and more demographically balanced area. So you're more likely to see mixed couples. And last time I did it was with 2 other couples, with my wife. So it appeals across a broad demographic more than sort of, I'd say, bowling or maybe cinema. You can't really go out together as a group. So it's hot here. Earnings forecast. So this is from Zeus Capital, who took part in their placing. It's a broker as well. But they plan to have 9, 15, 20. They've already signed agreements in the US. And so they've done 3 sort of levels here. They've done 3 scenarios. The optimistic case, base case, pessimistic case. And I'll go with base case because that's the mid area. But group EBITDA break even at Q4 21, but site level at end of this year. Okay, and annualized EBITDA 1.2 there, gross cash at the end of the year 1.2, but that's almost more than double there, and still cash here on the most pessimistic. So, so we say 2020 this year, next year they're going to get a break even, and so that's good. We have a forecast. You can see this working as they roll out the models. They're supposed to have 2 more already if COVID hadn't jumped in at the start of this year, they would have had a place in Basingstoke and Norwich as well. So there've been 11 sites, but they will be opening this year apparently. Directors. So do they have skin in the game? What is their track record? Is there good institutional holding? Are the shares tightly held? Now, you've got to look at all this. Sometimes, it's good to have, a board with lots of skin in the game, but they've got no track record, or, this, it's not commercial anyway. So, or, the shares aren't tightly held apart from the board. Then, so I'm looking at this. They took part in the last placing, which is very encouraging. It says chairman, CEO, CFO. I had CFO Graham on the podcast. I'll put the link below. I liked him a lot. He knew his stuff. He was, spreadsheet crazy, and you see he'd worked it all through, and he's got a very good background. And I really liked what he was talking about. But he's at 1.78% now, 1.43 million. Chairman 1.7%, CEO just under 1%. So they've got skin in the game. These are the background. This is the CEO, of course. He's Richard Harrison Hoole. Chief CFO there, managing director. He was at Pret a Manger as the global head of strategy there. So big company. Big responsibility, so he knows about strategy and rolling out sites and brands and all that stuff. Richard also had a number of strategic and financial positions in companies including Constellation Brands, Shire Pharmaceuticals, and 52 Siemens Computers. So big companies there, quite impressive. This is Graham Bird, who I talked on the podcast. I like Graham a lot. He was qualified with Deloitte in London. He worked at prior to Gresham, the Gresham House, which is a very sharp sort of brokerage house, investment house, fund management house. He's responsible for establishing the managing successful strategic equity business unit, which focuses on both quoted and unquoted equity investments, using the principle of practice of equity. Prior to that, 6 years senior executive PayPoint. Excluding, what else was he in? Pay by Phone. Before PayPoint, he was the head of strategic investment SVG, at JP Morgan Cazenove, where he served as director in the corporate finance department. So a lot of experience at well-known companies. So it's very encouraging that. As far as the shareholder register is concerned, it's held quite well. 20% of Canaccord. This is SpreadX. John Story. I'll talk about John. I sort of know John via email and phone. We've talked about it a few times. He's a very successful businessman and investor. I'll show you in a bit. But he sort of emailed me about. And he said, I liked the Gfinity video, because I was into Gfinity, of course, I hold that. And he's a big shareholder there. And he said, I like Gfinity. Have a look at Escape Hunt. He said, I've took some shares in there. Have a look at it. And so I had a look at it, and I liked it. And I've heard about it before, of course, but I didn't really research it. So thanks to John for giving me the heads up here, because, when you're investing, timing is sort of everything. And I think there are at inflection point right now with 9 sites and getting bigger. The EBITDA is growing, and like I said, costs are reducing. And I'll talk about the advantages of scale in a bit. That's John there. Zeus Capital 4%, Crux Management 3.5, or close to Octopus 3.3. So it's well held. But on 26th of August, they mentioned John in one of the RNSs here at Escape Hunt. They said, the following successful conclusion of 4.3 million fundraising, which closed in July. So a number of new investors taking interest. As previously announced, John Story, a successful entrepreneur and seasoned investor, investing 10% stake in Escape Hunt, being the largest non-holder joining at the register. John was a seed investor, a co-founder with significant ownership in a number of businesses, including, amongst others, Sporting Bet, Netteller, World of Gaming, Figureground Gaming, Zoetic, Blenco, Ocean Outdoor, Idigen, Entertainment One, and Eros International Entertainment. So you can see that those are all very quite successful companies. Some are quite new. But by the way, I'll also put this in. Escape Hunt will release its interim results in the final week of September. So worth knowing that. We're not far off from that. They may do a trading update. Who knows? Some companies do a trading update before that. Normally a couple of weeks before, maybe a month before. So maybe they won't do it. But they could do still. Still got a couple of weeks left. So who knows? But as we know, they've got interim results, final week of September. And it's not going to be a bumper, because they've had to close for March, April, May, June. 3 months had to close for, like most businesses, so they opened back up in July. So it's not going to be massive compared to previous years, but they were doing quite well. Before COVID, they were growing very quickly, and I'll show you that. So directors, yes, unique. Does have a USP. I say proprietary IP here. Claim to fame, first, fastest, smallest. This is what Warren Buffett calls a moat. It's a barrier to entry for most competitors. This means higher margins, higher valuation. Now, it's no real barrier to entry, but they have scale and they have IP, and I'll show you why. So first of all, they've got a premium product here, right? They were nominated Traveller's Choice Award. They're in the top 10% of attractions worldwide, and these were for all 8 of the sites that's been open longer than 12 months. Okay, they were awarded this, and for the one they weren't, the newest one, which was in Birmingham Resort World, look at that, they got 1,323 5-star reviews, pretty much. And so the newest site of Birmingham Resort, which only opened in December 2019, and is therefore too new to be eligible for the Traveller's Choice Award, was ranked top attraction in Birmingham and the West Midlands, and number 7 across the whole of the UK. So that there, they're doing AR and VR in there as well. So that's very impressive. And of course, no doubt when it gets to 12 months old, that'll be nominated probably as well for a Traveller's Choice Award. They've also got this with the BBC, Doctor Who game, Dalek Awakens, Escape Hunt original game. And like I said, you can only sort of align yourself with brands like the BBC if you have a premium product, and the BBC recognise you as having a premium product, because they don't be aligned with a tin pot sort of fly by night. So you have to have a good product, you have to have professional management, and the BBC recognise this. They've done a 5-year exclusive licence agreement with the BBC, as in July. The IP, and this is what Richard said, the IP content deal with the BBC Studios helps to further differentiate Escape Hunt from its competitors and assist in the strategy of being the premier brand in the escape room sector. And like I said, when this industry consolidates, and it probably will very soon now, the best quality, the best finance, the best located with the best product will survive. And Escape Hunt is pretty much the market leader. I think you're buying a market leader for sub 7 million, and they've got like 4 million in cash. Look at other market leaders in any areas and look at their valuation. You don't get at this level, So drive footfall and brand awareness. And the advantage of a market leader in scale and public listing. This is what I say. Public listing, they've got access to finances, and it's more well known at scale. Many of their competitors are mum and pop, what they call setups, unlikely to have financial and management resources to survive a downturn. And this is Zeus there. So we expect the fragmented base of independent competitors to shrink after the recession, leaving more resilient competitors, including Escape Hunt, positioned to absorb demand. That's Zeus there. So that's unique. So they are so unique as far as they are the market leader. They have a quality product, and they have scale. And like I said, they've got cash there, which mom and pop places will have a hard job going to the bank and getting money if they've got no revenue. Liquid assets, like I said before, they did 1.2 million in cash on the 4th of May, and they raised 4 million in July. That was by placing their 160 by means of by directors, and 340,000 through issue of convertible loan notes. Richard Harpin said, basically, to thank support received. I'm also delighted the board is also committed to contribute significantly, demonstrating all of our directors' strong belief in the growth strategy and potential of COVID. We are well placed to emerge from COVID-19 crisis well and to resume our recent positive momentum. And they, good growth. So easy to understand. If you've ever done one, they're very easy to understand. Basically, if sites, with Escape Room, they have 3 different themes in those sites. You can choose your theme. One could be Doctor Who, other could be futuristic or not, or past, whatever. So different themes. So very easy to understand. Based in the UK and around the world, but mainly based in the UK with franchises around the world. So it's very easy to understand there. Is it scalable? And they've been showing yes it is, because I want to show you their growth here, right? This is the growth revenue up 128%. 4.9 million since the year ended the 31st December. From 2.2, so look at that, more than double there, of course. Revenue owner-operated sites, excluding franchise, up 275% to 3.8 million. EBITDA from owner-operated sites rose 2.6 from half a million. Franchise EBITDA increased to 300,000 from 14 grand. Now, there's losses here, yes, but look at the reduction in the losses. Very encouraging. So the loss was like 3.1 million EBITDA loss last year, down to 1.7, halved pretty much, and again nearly halved again on operating loss. Now if they do that again, of course, it gets to the stage where as they get more sites, they generate more cash, those losses halve and halve again, become insignificant, they start making profit, and that's what they're going to do. Again, cash here, 2.2 year end, 1.2 at 30th of April. So in July, they reopened most of their existing 9 sites. They plan to add 7 new sites by H1 2021 and a further 5 by Q4, 20 in total. So I'm just saying, are they scalable? This is what I'm talking about here. So let's have a look at this. Generally, each new site costs them $500,000 to get up and running. The cost, they produce about $500,000 in revenue per year and 150k of EBITDA. That improves though with scale, and the costs come down. So that's on average. It's gone from 600,000. It will be going down to 400,000. Like I said, so someone talk about scale. I'll give you an example. The power of scale, the bigger you get, the easier it becomes. So a lot of these companies are mom and pop stalls. They have one business. Now, going from one business to 2 businesses is very hard. If you own one site and want to open another, it's very capital intensive. So if it costs $500,000, that's equivalent to 3.3 years of EBITDA. So you take 3.5 years. If you want to save the money, pretty much 3.5 years, pretty much, or 3.25 years. To get the money to invest to open another one. Now, if you have scale and you have 3, sites, to open another one, the equivalent is only 5 months of EBITDA. So see how easy it gets if you're 3 times as big. So at the moment, most operators just have one site. To get that next site is very hard for them. Very hard indeed. Escape Hunt are way above this, They're now at, 9 sites. So if you own 9 sites, it's equivalent to 6 weeks of EBITDA to open another one. So you can see how it becomes better, and that helps because if you're a listed company, of course, you can do a placing, which they have done now, but they won't need to do any more placings. And that's what Zeus Capital is saying. They probably won't need to do any more because they just do it via bank if they need anything. The Zeus Capital written 1.5 million they need to raise, and that's, even a pessimistic view. So, and this is basically, so I said you have enough cash. They have enough cash now to open at least another 6 sites. I think their sites are 15 sites. This would generate around about 2.25 million EBITDA. I've been conservative here. Zeus has gone above that, and they're pretty more accurate than I am. Enough cash to open another 4 sites per annum. So that, and as you open more as well, you can open more. Obviously, they won't need to keep opening that amount. Anything they don't open will go to the bottom line and give us profit. But what I'm saying is, it just shows the power of scale. And this is where you've got group EBITDA. They're going up there from 0 to Q3 to 1, and you've got site EBITDA, of course, getting larger and larger and larger. So the bigger you get, the scale you get, the more EBITDA and the more money flows to the bottom line. All right, so just point out that they've got in 2022 sites EBITDA 2.4 million, so above 2.5, and they say here, look, probably in 2021 they'll go via debt funding for 1.5, which means no further dilution, which is very encouraging for shareholders. So it seems like the cash they've just raised now, no further dilution, is enough to take them through to break even. And if they need to raise, they'll just go to the bank. So there we are. So, and this is economies of scale, and this is from Zeus as well. The company has been working with suppliers to reduce the cost of installing new games, and it's modularized games for easy replication and installation. Like I said, you get experience and you understand where you can be more efficient. Recent property deals have also seen significant cash contribution from landlords. Landlords are now desperate. You've got retailers failing, of course, traditional retailers failing. Experiential areas like this, are getting more popular. So there's plenty of landlords there looking for tenants in places, So whilst COVID may reduce the cash contributions, it's undoubtedly created a buyer's market in retail property, which would benefit Escape Hunt. So as such, we believe net capex should fall to about £400,000 per site, resulting in about a return on investment of 36%. So they are open. COVID, now they've opened to July. The company's historically focused on second-tier locations, but recently added sites in premium, high-traffic retail outlets, Bristol and Oxford, with success. And so they're going down this route of even, high, and they can afford this now. So the strategy to expand should be supported by pandemic's impact. Retail property is likely to be a buyer's market. With reduced rental rates, Escape should now be able to access sites not previously affordable available. So these very high, expensive premium areas, locations, they can now do that and afford that. The company is already receiving offers of lengthy rent-free periods and more flexible rent models for sites with significant higher utilisation and revenue potential. The improved economics of premium sites should represent a substantial opportunity. So again, another positive, economic sort of dynamic here, where these high footfall sites, of course, landlords are looking for tenants, and Escape Hunt can take advantage of that. By the way, they also have outdoor things. They've diversified into home gaming. You can do games that don't download games. You can do, they're going into AR, VR type of games as well. But just looking at the broader picture, there's 69 cities in the UK, you know. At least another 30 towns with population over 100,000 that could support an escape hunt site, you know, or escape room. If they don't have one, of course. I'm not saying they're going to go do all that. Then you have their franchise model, which is the opposite of capital intensive. Franchises pay them 25 grand up front to set up and give them a cut of their revenue. 30 franchisees adds a million of recurring revenue to the top line. And there's other games formats they are playing with, including AR, VR outdoors, playing at home games too. So there's a couple more revenue streams here, and any more. No, that's it. Yeah, that's it. So you can see lots of potential there, and I think, like I said, this could be a market leader. And buying a market leader, at sub 10 million, which has got sub 7 million, with 4 million cash and good growth, I think it's a huge opportunity. And at the moment, the share price has gone down, of course, because of COVID. It's all baked in. I think the worry is baked in. It'll be interesting to see what the interims hold and what the outlook is and how they've been doing currently since they've reopened. But I genuinely think it's patience. I think we're going to get past COVID. We're going to look beyond this, almost write this year off. We're going to have a vaccine probably towards the end of the year that will be available to high vulnerable groups, which is basically all that's needed, the vaccine for, because we can see now healthy individuals generally don't get affected too much by it. And I think we'll be back to opening the economy. It'll take a while to get back to normal, but you've got to have a longer-term view on this. And I think in a couple of years' time, when the market is belly down and these independent escape rooms have gone by the wayside, Escape Hunt will be the market leader. And then they have obviously the margins, the cost, the efficiencies, the prime locations. So I think a bit of a long-term view on this is worth having. But do your own research. I find it very interesting. Thank you for watching. If you've managed to last this long, appreciation. And if you did like the video, hit that thumbs up button if you could, and share it with someone who may also want to watch the video. And don't forget, if you want to get the next one to your inbox straight away, the next video that is, because I don't release them every week. It's every now and again when I invest in something, I see potential. Then hit that subscribe button and the notification bell. That bell is very important because you will be notified. I mean, if you hit the subscribe button and that's it. When you come on YouTube, you'll probably see my new video in the feed somewhere. But that's if you, obviously on YouTube very often. If you're not on YouTube, then it's best to get notified and they'll send an email to you as soon as I release a video. But if you want a heads up on the video, then if I were you, I'd join my email newsletter list, and you can do that in the link below the video to see more information. And I often send out a preview, like I said, on Friday. I sent out Friday afternoon, market still open. I sent out a preview of what this video would be about, and a couple of people did buy in on the back of that. I gave a summary of this video in my email newsletter. So that's a sort of preview to the video. So if you want a heads up before that, join my email newsletter list. And like I said, there's a link below right there. Okay, if you want to subscribe to this video, by all means, hit my face there and notification bell. Thanks for watching. Until next time.